how do you think the Indian economy is doing, Indian economy and its reflection on the markets, given this so-called recovery? And every now and then a knee-jerk reaction, whether it's the markets or numbers.
So, Shaili, off the peak, if we go back to 2007, pre-crisis, summer 2007, the Indian economy has lost approximately 3 percentage points of its growth. At the best, I think we were growing 10.5% in this country. That growth rate is now 7.5%. Inflation, on the other hand, has been cut in half. So if you take a look at just those two statistics, a slightly more moderate pace of growth, but with a clear control over inflation, India actually comes out of this a net winner from the crisis.
And when you say net winner, I'm always going to ask you the question about China, because there has been plenty of talk that there could be potentially property bubbles once again in China. Do you sense that at all?
I think we have to take great heart from the fact that the Chinese central bank has started to show some real circumspection around monetary supply and around the possibility of there being too much liquidity in the system. I'm surprised markets found that to be a negative. I personally took great heart from it. It shows a great deal of circumspection and caution around precisely that issue. Chinese banks are in good shape. Typically what you have to worry about is the nexus between the real estate sector in a country and the banks that lend against it. I'm not as concerned.
But the fact that if this is going to be a situation in China where you're not too concerned, that means you're also convinced that if the Indian banks go on to raise rates, that won't be a bad situation. This whole 1 billion population that will drive the internal growth engine could certainly find its hands tied a bit.
Till inflation doesn't rear its ugly head again, I'm not as concerned about sharply higher rates choking off Indian growth. Our economists are predicting a fairly sustained 7.5%, 6 to 8% growth rates in India for the next 2 to 3 years with contained inflation, which, by the way, for markets is a wonderful story. You would much rather have that as a backdrop than very high growth with very high inflation, because that always has the specter of higher interest rates, as you said, which in the end would then choke off.
Do you feel this more because you're sitting outside India? Because sometimes I feel that a lot of people who sit inside India, they keep worrying about this inflation figure. Yes, food inflation has political ramifications, but here seems like the whole story is a little bit of nervousness as opposed to what I hear from you.
The real source of worry for India has to be energy inflation, even more than food inflation, because India in the end imports a lot of its energy. And that can be a real factor which can choke off growth in this country. And the fact is that a few percentage points being taken off global growth, and even Chinese growth slowing down, takes some of the heat off commodity inflation, and particularly energy inflation, which I think is a real boon for India.
So in that sense, do you think India has the potential and there are prospects that we could do what we did in 2004 when we had a blow in the markets and a blow in general because of the economy and its uncertainty, and then towards the end of the year, the markets went up to brand new highs and the economy also felt a little more settled. Is 2010 likely to be a repeat of something like that?
The outside-in view on India is that India is uniquely positioned. There's such a buzz around the whole emerging market story again because of the factors we talked about earlier. Growth in the West is going to be very slow. Western investors are looking for emerging market growth. Their concern with emerging markets is they want countries that are the least geared towards Western exports. And India, from that standpoint, is in a tremendous position.
But could this reflect on the stock markets, you think?
It will. There's no doubt about that, and positively, ideally, because you've got a country which has got high savings, it's got a need for infrastructure investments, it doesn't need to turn to the West for either capital or as an export market. So you've got self-sustained growth prospects within the country, which is a very attractive proposition for Western investors.
You say so, then that means you potentially believe that the next 12 months will be more bullish for the Indian market than they have been right now. Because we've actually, I think we've gone down significantly. We might not have netted towards an 8,000, but we're pretty well back.
India is linked to the global economy. I mean, at no point am I suggesting that India will be in a cycle of its own. The point I'm making here, Shaili, is a differential story, again, versus other indices. And India has outperformed, will continue to outperform.
What is the true Indian corporate up to these days?
Certainly giving you an international perspective, back interested in looking at the rest of the world. So I think after an 18-month period where there's been a fair amount of introspection, not the least because a few of the Indian corporates that did venture overseas clearly ran into an inclement business cycle and were challenged by it. The others withdrew to an extent. On this trip and the last one that I had back in October, sense I'm getting is that Indian corporates are back confident again. There's tons of cash on their balance sheets. That's the one story I'm hearing across the board. And they're back looking pretty aggressively.
Do you think that, there is a sense of regret, and perhaps as an investment a banker, you can probably see this better, that when there was a high point and most Indian companies that picked up their assets at the peak, went whole hog in spending. And today they really don't want to let go of this opportunity to really make money rather than overspend on an asset, which they did in 2007.
Anytime you make acquisitions at what turns out to be the peak of the business cycle, in hindsight, you can say that was a mistake.
Yeah.
Ex ante, I think it's a very harsh judgment to look at it like that.
But there were plenty together at one point in 2007.
Well, it was a logical thing to do. I think to deliver an exposed judgment on that would be somewhat unfair.
But today you think that the Indian corporate has actually realized that it's time to really utilize this recession into an investment process rather than just let go of it and hope to make money when things improve?
I think it's a story that that has to be analyzed one corporate at a time, but there are many that have a real opportunity right now.
Do you see M&A in a certain sector picking up a little more, utilizing the recession to its favor?
I think the energy and oil sector in particular is one where I think there is a real opportunity, but I think there are other sectors as well. And again, I think it's a combination of very strong cash positions and a differential equity premium, which Indian corporates enjoy.
Do you think that
make that a possibility? Again, and just one other thing which I'll point out. I think the possibility of there being a currency opportunity as well is one which could really trigger this over the next 12 to 18 months.
But India did some of its largest ticket deals in 2007. Do you think we have the potential of changing that benchmark?
No doubt about it. I think if we were to be chatting a year from now, certainly 2 years from now, we'll look back and we'll recognize transactions that were every bit as significant, if not more significant, than the ones we saw in 2007.
What's your whole take on the liquidity situation in Indian banking system right now as a lender to corporates?
Indian banks have actually come through this crisis remarkably well, and real kudos to the Reserve Bank of India. I think the restrictions that kept very high leverage consumer debt from growing too rapidly, and also bank lending into the real estate sector, have proven to be very wise decisions. And that means that Indian banks have weathered this crisis in much better shape, not just compared to Western banks, but other Asian banks as well. So the Indian banking sector and the financial sector in general, I'll include insurance companies there as well, is in very good shape, which means that high savings rate which India enjoys is being turned into capital via banks in a very efficient manner.
Since you talk about insurance, I just want to ask you what your thinking is on this whole insurance sector opening up. Do you think that could be a game changer for the Indian markets? And everybody looks at anything linked with capital markets and banking and finance as a real mover in making the market more mature. So could the insurance sector opening up be a big mover?
Insurance has been open for a few years now. You've got a number of global players.
Yeah, but I mean in terms of increasing FDI and then allowing it to sort of...
Oh, no question about it. I mean, if you're asking me the question, that's a liberalization question. Yeah, I would totally be in favor of that.